first point of note, it comes from the LBMA. We saw a lot of buzz about this on the internet, and I was like, I need to get Jim's take on it. The LBMA, which is the London Bullion Market Association, overstated their silver holdings in April, an error which they later rectified. So my question to you, Jim, is this error purely one of accounting, or do you think there's something more behind this news story?
I don't think there's much behind it. Look, who are the members of the LBMA? They're some of the largest banks in the world. I'm not I started my career 10 years at Citibank. I was their International Tax Council, so I know a little bit about banks. They have their problems, and I'm not saying that their hands are always entirely clean, but things like that do happen. I do think that a lot of analysts make too much of it. It's okay. They got some inventory wrong. They admitted it. They recounted it. They restated. I mean, what would be the purpose of doing that? I mean, what's the backstory there? I don't think there's much to it. And the other thing I would observe is that there are a lot of analysts who are out there, and they're always looking at the inventories in the vaults, and that information is available. There are only certain vaults that are designated, good delivery vaults who are part of the good delivery system by the LBMA. We know who they are. They do have to file reports. There are regulators, whether it's the COMEX or financial regulators in the UK. So that information is out there, and people look at these inventories and they compare them to open interest and futures contracts or other contracts, and they go, "Oh, there's not enough precious metals to deliver on all these contracts." Well, first of all, that's always true. The paper open interest, if you count futures and over-the-counter derivatives and other contracts, option contracts, et cetera, is always a high multiple of the physical inventory. And that's because it's not supposed to settle. And Blythe Masters said that years ago. I had the quote, I preserved it, but then I could never find it again. I saved it, but she was giving an interview, and I sometimes people who are highly knowledgeable, they don't want to say everything they know, but they let slip. And she said, gold never settles. And she was right, because if it ever did settle physical for paper, it wouldn't work. But if you read these contracts, there are always termination clauses, force majeure clauses. Read the rule book of the COMEX. It says in the rule book, we are not a source of supply. It says that. They also have another rule saying they can change the rules. So, and it says that we can change the rules. They have a board meeting to have an emergency, what we call disorderly markets, and they can change the rules. So they're prepared for this. They know it. Market professionals know it. So I never read too much into these inventory counts, and because of course they're low, and they can always get more gold and silver if they need it.
I guess just 2 points, Jim. What the buzz was in the industry is that, one, it comes at such a bad time, I would say, in the precious metals industry, when investors are trying to figure out how much supply is in the marketplace. And two, I guess a lot of the reasons that people didn't buy this, it's an accounting error, is because it kind of coincided around the same time that we saw a lot of activity in the silver space. So just bad timing, you think?
Well, it could be, but if it's, I always say, if you have, as a philosophical or logical principle called Occam's razor, it says if you're trying to solve a difficult problem and you have a simple explanation and a really complicated explanation, always go with the simple explanation. Just probabilistically, it's much more likely to be the right answer. So, if this was a part of some deep dark conspiracy, where's the rest of the conspiracy? You can infer it. Well, I wouldn't even say infer it. You can make it up, but it doesn't hang together. And, again, so is there ever a good time to make a high profile accounting error? Probably not. There's probably always something going on, and you can link it to. By the way, there are really, really serious fundamental things afoot in the precious metals markets. I don't doubt that for a second. I've been one of the ones, longest and most, adamantly saying that gold prices are going to go a lot higher. Silver is going to go higher with it. Silver is a different analysis because it's an industrial metal as well as a precious metal. It's not a pure play. Gold is much more of a pure play. Gold's not really good for anything except money. So they'll go up together. And if you say, is there manipulation in the market? Of course there is. In my book, 2016, The New Case for Gold, which is also a national bestseller, I actually give a handbook on how to manipulate the market, saying I know how to do it, and I explain how it's done. So it does go on. There are backstories. There are some really really major fundamental things going on. I'm not saying that's not happening, but I wouldn't put too much weight on one like little accounting error.
Okay, how about this backstory for you? I was just speaking with an expert before you who was saying we're going to see higher gold prices. One piece of the puzzle is more and more pension funds are looking at adding gold to their funds. The World Gold Council putting out a report that now 30% of UK pension funds are considering adding gold. We just saw a Dutch fund add a 5%. So is this a trend? Is this behind some of the move?
Not really. I mean, pension funds, and I don't dispute the facts. I mean, if some pension fund put on a 5% allocation, good for them. Pension funds it's hard to think of an institution that's more slow moving. It's like watching a glacier. I mean, we all know that glaciers move, but they don't move fast. Occasionally they do, but that's extremely rare. Their decision cycles are, 2 years or longer. Everybody said, well, we're thinking about it. Well, that's fine. Why don't you actually do it? And they don't. They will do it, by the way. Pension funds will get into gold when it's, like $4,000 an ounce on its way to $5,000 an ounce, when they've missed a lot of the initial gains, a lot of the initial moves, when they kind of missed the boat, notwithstanding people like myself and your prior guest telling them to get on board. Then they'll do it when it's almost, it won't be over, but they'll miss the missing initial surge. That's just the way they operate. But it doesn't matter because if you look at just the fundamental facts, global mining output is flat. It's not zero. I'm not talking about peak gold. Actually, maybe gold is getting harder and harder to find. But, I always, I'm somewhat critical of a lot of analysts, particularly people in Washington, but New York, but elsewhere. They don't get away from their desks. I mean, they just sit at their desks. I'm at my desk now, but that's okay. But they just stare at the screens all day and they know what everybody else knows. Well, I travel around the world. I visited the biggest refiner in Switzerland, on site, the second biggest refiner in Australia on site. I've been 1,000 feet down in a gold mine not long ago out in Utah on site, with a helmet and headlamp and the whole thing. I talk to dealers all the time, like real physical dealers who, are working orders, et cetera. So I'm kind of out there hands-on with the industry from mining, mills, refining, dealing, et cetera. And I can tell you gold is in short supply.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
They can't get it. Global mining output is about flat, has been flat for 5 years. It's not declining rapidly, but it's not growing, even though the price is going up. So obviously margins are going up. Miners are making very good money. Individuals are buying it. I mentioned miners, refiners, dealers, etc. I've also met with the head of logistics for one of the world's largest private vault operators. And they say the gold's coming from the banks to the private vaults, that they just see it every day. They're adding capacity as fast as they can. I'm talking about, buried inside Swiss mountains, so, with multiple security perimeters, those kind of vaults. They're getting a lot of gold. The gold's coming out of, Deutsche Bank and UBS and Credit Suisse and some of the other big banks going to private vaults, which means it's not for sale.
That's interesting. So I guess that's my segue question is, are we seeing the smart money present yet in gold? JP Morgan putting out a report this week. We saw the pullback in Bitcoin, and the report signaling that there's, their investors are taking money out of crypto now and placing it into gold, a reversal of the narrative.
Yeah, it is a reversal of the narrative. I don't necessarily think of JP Morgan Research as the smart money. I'm not disparaging them at all. They're smart people who work there. I was once taken aside by it was tapped and asked to give a private consultation to the head of global commodities trading for Goldman Sachs. It was at some meeting in Hong Kong. We sat and had a great conversation for about an hour and a half. And he wanted to kind of pick my brain on China a little bit. So at the end of it, I said, I got a question for you. Your research department just came out with a report that said gold was going to $1,000 an ounce. And he looked at me and goes, well, no one listens to them. I mean, this was the head of, it was Goldman's research department. The head of trading for Goldman said, we don't listen to our own research department. I said, okay, that explains it. But so I don't necessarily put a lot of weight on that. But if you look at talk to real dealers, real refiners. Where are you shipping the gold? How difficult is it to get it, et cetera? Supplies are extremely tight. I put in orders that can't get filled. Good dealers, they call back and say, well, Jim, I can't get it right away. Let me work on it. The U.S. Mint stopped taking orders. I mean, there is an excess of supply, demand over supply, which means the price goes up. It's that simple.
Jim, like I said, your latest book, The New Great Depression, a national bestseller. If I look at the headlines now, fresh off the press here, jobless claims dropped more than expected for a new pandemic low. Are we on the road to economic recovery post-pandemic here?
No, we're recovering, but today, I'll just use the United States as an example. Today, here we are in May 2021. We have not gained 2019 levels of output. Now, we've had growth, we had very sharp growth in the third quarter of 2020. It really tailed off a lot in the fourth quarter, partly because there was a third wave of the pandemic. First quarter was a disappointment. Second quarter, we're in it now. It remains to be seen. I'm not saying there's no growth, but I'm saying we're still not back to 2019. So where's the boom? Where's the V? So it's not there. Initial claims for unemployment are to a post-pandemic low. Okay, but they're still double the pre-pandemic numbers. In other words, 200,000 claims used to be a high number. Now it's 400,000 claims and everyone's opening the champagne corks. It's like, no, they're still double what they were before the pandemic. It's lower. Yeah. Okay. The trend's going in the right direction, but that's still a high number. That don't even, you can have the unemployment numbers don't tell you very much because they ignore labor force participation. They ignore 10 million Americans, able-bodied Americans between the ages of 25 and 54 who are not working, but they're not counted as unemployed because they're not looking for jobs. I make the point, if you're a bartender, why look for a job if all the bars are closed? Some of these things are improving. I'm not saying there's no growth. I'm just saying this is nowhere near what you would expect given the severity of the crash in 2020.
And finally, Jim, let's just wrap with the Fed. What is the central bank to do here? How backed into the corner are they?
I can't think of an institution that's less relevant and more impotent than the Federal Reserve. They have no role to play. I'm serious. They have no role to play. Interest rates will be zero, until further notice. Maybe 2 years, 3 years, or longer. They're buying assets. They're expanding the balance sheet. It has no impact because they buy assets from the banks with money that comes out of thin air, and then the banks take the money, give it back to the Fed as excess reserves. What does that do for the economy? It doesn't get lent. It doesn't get spent. There's no velocity associated with it. There is no there's no monetary stimulus. So the Fed, now they put on a good pretense. I mean, Jay Powell's a smart guy. He's a lawyer, puts on a good show. As my favorite is Mario Draghi. I mean, nobody puts on a better show than Mario Draghi. There's only one central banker in the world who actually knows what she's doing. That's Elvira Nabiullina, who's the head of the Central Bank of Russia. She knows what she's doing, and she's taken gold as a percentage of total reserves up to 20%. 20% of Russia's reserves are now in physical bullion, thanks to her. So she knows what she's doing, but the rest of the people, Janet Yellen never knew what she was doing, still doesn't. Powell's a little smarter, but they can't do anything. They can't cut rates. They're not going negative, and they can buy all the assets they want, but no one's using the money. So what good is that?
Not painting a really good picture here, Jim, but
well, but I wear bright colors for the occasion, but seriously, I always say, people go, you sound like a pessimist, doom and gloom, which I kind of reject that label. But I'm not an optimist. In real life, I'm an optimist. But when it comes to economic analysis, I'm not an optimist or a pessimist. I'm a realist and an analyst. So stick to the facts, stick to good analytical methods, throw away the garbage models, invent good ones, and go from there.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.